Good morning, everybody. Afternoon, if you're not in Colorado. If you're on the East Coast, good afternoon. Everywhere else, good morning. Welcome. I'm doing my normal check to make sure we are actually live and you can actually hear me, because that's always my main concern. All right, let's peek. Can you hear me? If you're on here, I see a few of you guys jumping in. Can you hear me? Tell me you can hear me. Otherwise, I am going to just peek and make sure that we are working. I don't see it on Facebook. All right, let's see. All right, let's see. All right, there we go. Okay. We look good. Okay, we look good. Welcome. All right. Happy New Year, everyone. Happy the 16th. I don't really know what's exciting. Happy tax season. We are jumping into it. And, excited for this year, excited for some new opportunities that we're offering clients and growing our clientele. So welcome. If you do not know me, I am Bree Beers. I own Bree Beers and Associates. We're a tax accounting and advisory firm in Denver, Colorado. We work with clients across the country in 48 of the 50 states. We don't work in California or New York, but everywhere else. And I'm going to turn this just a little bit because I see that window glare. Okay. And what me, myself, and I'm a CPA, I'm a certified tax coach, an advanced tax strategist, a fractional CFO. I have a bunch of titles because I've taken a bunch of classes and passed a bunch of tests. But where I hang my hat, or where I hang my hat is on my 20 plus years of experience in accounting, 14 tax seasons, and 7 years as a business owner. That's one thing that I love when people work, whether you work with me or another small business owner, tax accountant. What you get with a small business or a small firm versus using a big company or using one of the big box firms is that you get a business owner who knows that side of the business. We don't just know tax, we also know the entrepreneurial side. And then for the last six or so years, what I've really been focused on is learning the tax code and learning the tax loopholes and figuring out how this tax planning and strategy works, and figuring out how to bring what we believe is reserved for the rich and the wealthy, bring those strategies and figuring out a way to share them with small business owners, with the everyday, workers like you and me. And our goal at Bree Beers and Associates is really to help take these strategies and, help our small business owner clients implement them, because we believe it's the first step really in this working middle class, in our ability to build wealth, right? Because with proper tax strategy and tax planning, you can essentially make no more dollars in your business, this year versus last year. But by lowering your tax bill, it's kind of like giving yourself a raise, right? Without actually doing the extra work. So that's what we do. So today, guys, I'm really excited about today. I got a number of requests for this topic. And we're going to talk about, is your business ready for tax time? All right. And I get this question because what happens is I know that a lot of business owners, the beginning of the year, we come to January and they're like, yeah, I'm going to get my stuff together, but they don't know where to start. And what I find is a lot of times as small business owners, you're actually more prepared for tax season than you think you are. All right. And so it's important to keep in mind that it shouldn't be overwhelming. And we're going to talk about those different pieces and how to make them easier if they're not easy in your business for you today. All right. So the first thing you need to do, guys, is you need to know when your business taxes are due. All right. Because depending on how your business is set up, you have a different deadline. All right. So if you are taxed as an S Corp or you're set up as a partnership, all right, then you are filing a separate tax return. Partnerships are filing a 1065. S Corps are filing an 1120S. Those returns are due March 15th. All right, that's very important for you guys to know because I get a lot of businesses or a lot of clients, taxpayers who have April 15th in their head and they come in and they've already missed that first deadline, or they come in, on March 1st, 2nd, 3rd, 4th, and they don't realize they only have a week and a half to file their business return. Okay, so if you are an S Corp or a partnership, your business return filing deadline is March 15th. If you are a C Corp or your business is a Schedule C business. So what that is if you are a sole proprietor, if you are a single member LLC, anything that isn't a C corporation, an S corporation, or partnership, all right, then you are a Schedule C business. And when you're a Schedule C business, your business is just reported as a separate schedule within your personal return. Okay, and so your business return is due April 15th, the same time as your personal. All right. It's also really important to know that if you're using a tax preparer, so if you use HR Block or TurboTax, they're going to help you file up until the deadline. All right, you can log in on March 15th and file your S Corp return. All right, you can log in on April 15th and file your personal return with your Schedule C business. Okay. But when you have a tax preparer, especially if you're working with a small business like Brave Bears and Associates or most other small business owners, small tax firms, we're going to have a different internal deadline that we communicate with you and let you know that, hey, this is the deadline for you to get your documents into us in order for us to file on time and not have to file an extension for you. All right. And if you're a client of ours, you've seen the emails, you're going to continue to see the emails. And for us, if you're an S corporate, a partnership, you've got to get your business stuff into us by February 24th. All right. And for everybody else, for your personal returns and those of you that have Schedule C businesses, it's March 24th. So it's about 3 weeks before the deadline. And that's for numerous reasons, but our typical turnaround time for returns when we're in busy season is 2 to 3 weeks, because we have a ton of them, because we have a process that we go through to make sure that not only are we doing your returns right, but we're maximizing your benefits and making sure everything's, handled in that piece. All right. So make sure you know your tax preparer's deadlines, not just the tax filing deadlines. All right. So the next piece is, so we got to make sure our books are in order. Okay. And this is the part, you guys, this is the part that most business owners start to fret about. Okay. And this is the part where we tend to delay, right? January comes, we're like, we're going to be on it for tax season. We're going to get our stuff into our tax preparer, or we're going to have it all ready to put into TurboTax, however you do your taxes, right? But then we don't really know what that means. We don't really know what it means to have our business books ready. All right. And so that's what we want to talk about. And that's what we want to spend a lot of time chatting about today. And I encourage you, if you are catching this live, to include your questions, to post your questions, so I make sure I address those. So making sure your business books are in order. All right. So I'm going to step on a little pedestal here real quick. And your books. So if you are the kind of person, there's two kinds of people, right? There's two kinds of business owners. There are the business owners that, whether you do it yourself or you have a bookkeeper, you keep up with your books on a monthly basis, right? You're doing all the tasks we're about to talk about, reconciling, you're doing all that, or you have someone doing that on a monthly basis, right? Then there's the bunch of us. This was even me, you guys, when I first started in my business. There's the bucket of us who do not keep up with our books, and then we cram it all in when our taxes are due. All right. Guilty, not anymore. I have a team now, but that was me when I first took over my business. I was not keeping up with it, and I was, cramming in January, trying to get everything ready for the tax return. And if that is you, here is what I need you to do. I need you right now to find someone to clean up 2024 for you, to help you get everything in order. All right. Because that is what's going to prevent you from filing your tax return on time, right? Is the overwhelmed feeling of trying to catch up your books from 2024. Okay. So find someone to help you. I know this is an expense. A lot of us, especially when we're small business owners, we don't necessarily have the flow to do this. But in order for you to not be behind or finally get ahead of your tax situation, you've got to get current on your bookkeeping. All right. and I'll talk about, this is not what we're here to talk about, but like I will tell you at the end or like in a little bit why keeping up with your books is also important as a business owner in general. All right. So if you're at the point where you're like, my books are a mess, I don't even like, this is why I can't find my taxes, then bite the bullet and have someone help you get 2024 in order so that you can get that done now so you can get 2025 off on the right foot by, say, March, okay, by the end of first quarter. Okay, you can't continue to run a business successfully only looking at your financials once a year in arrears. All right. Because if you do not know, this is the diatribe I told you I was going to go on. Okay, guys, because if you are only looking, if you do not know until January of 2025 what your financials for 2024 look like, you are not going to succeed. Okay, you're not going to build and scale the business the way you want to, because in order to be a successful entrepreneur and run a successful business, you have to make data-driven decisions. All right. And in order to make data-driven decisions based on the financial impact of those decisions, you have to have accurate financials. All right. So we'll do a whole nother, I think we'll probably do a whole nother training on the importance of up-to-date bookkeeping and up-to-date financials. But for those of you that are in this bucket of my 2024 is not even done, my financials aren't done, bite the bullet, find someone and have them help you clean up. If you need recommendations, we have bookkeepers that we work with that do cleanup work, okay, that can step in and help you get those 2024 books in place or, up to date so that you can get your tax return done and then start 2025 off on the right foot, okay? So making sure your books are in order. So sometimes we get people that are like, well, there's this middle bucket, right? You're not confident that you've kept up with your books on a regular basis, but you've done something, right? And so let's talk about what does it look like to have your books tax ready, all right? And what that means, you guys, is you're reconciling your bank accounts or all of your accounts, okay? So on a monthly basis, or maybe, you're doing it quarterly, but for all of 2024, all of your bank accounts are reconciled, all of your credit card accounts are reconciled, and all of your loans and liabilities are reconciled. If the thought of all of that overwhelms you, then that is a flag that it is time to look into hiring a bookkeeper to help you out with these tasks. All right. And I will always tell everybody, like, as soon as you get to the point where your capacity, right, you're kind of at capacity for what you can do in your business and you're spending any time in bookkeeping, it's time to offset that. Okay. Because bookkeeping is not a money generating activity, right? You don't want to spend 5 hours a week doing your books when you could be spending 5 hours a week, that 5 hours actually making money, right? Making sales, making product, making services, right? So outsource that and it will more than pay for itself. All right. Whatever hours you save on not doing bookkeeping yourself that you can now go make money with will pay for your bookkeeper. All right. And your bookkeeper will pay for, while it doesn't make money, your bookkeeper is going to pay for themselves because they're going to have those numbers and those financials up to date so that you can make educated decisions in your business going forward. All right. So items to reconcile, make sure your bank accounts, your credit cards, your loans are all reconciled. All right. Make sure that when you look at your profit and loss, your P&L, all of your expenses are properly assigned. Okay. Again, this sounds overwhelming when it's just you. That's why it's great to have someone who knows this, to have a bookkeeper in your corner that can do this, right? They're going to do all this and then they're going to come to you as a business owner and say, hey, I have 5 transactions. I'm not sure where to put. Where do I put these? And then you help them put them there. All right. Because your expenses being properly assigned or properly categorized is important because there are certain expenses that are treated differently on your tax return than others. A great example of that is meals. All right. Generally speaking, meals are only 50% deductible. Therefore, you need to have your meals in the right category so they are treated properly on your tax return. All right. If you have your meals in marketing, like we do have clients do that, we're going to overstate your expenses. And if the IRS audits you, you're going to end up owing money because you overstated those expenses. Okay. So making sure that your expenses are properly assigned. That's a big piece of making sure your books are in order. All right. And the last piece to making sure your books are in order is making sure that any of your owner's items are properly identified and reported. All right. So if you're a Schedule C business, all the money you take out for personal use, you're allowed to do that, right? but it's not hitting the P&L. You're not somehow, when you're taking it out of the bank account, all right, it's being recorded as an owner's draw, not somewhere weird. Okay. And that's one of the things that when we do cleanup, we a lot of times are looking at. We're seeing that owners' expenses are buried in the P&L where they don't belong. All right. So having your books ready means having all of your accounts reconciled, your bank accounts, your credit cards, your loans. It means having your expenses properly assigned, and it means having your owner's items properly identified. All right. Truly, that is it. Okay. If your books are to that point, all right, your accountant should be able to proceed from there. All right. There may be questions. There may still be a little bit of cleanup work, but you're there. Okay. It's like the 80-20 rule. We spend 80% of our time doing 20% of the work. If you got this done, you've got 80% of the work done. Okay. You just need to get across the finish line, and your accountant hopefully can help you do that. All right. So what you need to do after you know that your books are in order, and you guys, we talk about our books being in order, and typically we're talking, because we're using QuickBooks Online or Xero, we're using some sort of platform to do this. All right. I know there are some of you out there that still use Excel spreadsheets to track your income and expenses. And that's fine for when you're first starting out and very small. I get it. Again, we don't want to, softwares can be cost prohibitive, right? But at a point, as you start to make money, investing in an accounting software such as QuickBooks Online or Xero or FreshBooks is essential, okay? Because it's going to save you time down the road, but it is also going to improve your accuracy of your financial records, okay? Because Excel spreadsheets are great at the beginning, but as soon as you can get into some sort of software, then I recommend doing that, all right? And shout out, I have a friend, Courtney Boudet, with Eating Numbers Cruncher. What she does is she helps small businesses set up their QuickBooks so that it's ready to go. So that if you're not quite ready for a bookkeeper, right, but you're still doing the bookkeeping on your own, but you want to make sure your QuickBooks is set up properly, right? So it's being a tool and not a hindrance. That's what she does. So find someone to help you set up the QuickBooks file or the Xero or the FreshBooks, whatever you have, someone help you set it up, invest in that to make sure it's set up properly so you can utilize it the right way. All right. So the next step in making sure that your business is ready for tax season, is to gather your essential documents. Right? This is different for your business versus for you personally. All right. So for your business, your accountant is going to want your income statement, right? All of your P&L, your income and expenses, right? That's the main thing they're going to want. Again, if you're still working out of an Excel spreadsheet, then that's what they're going to want, is the summary of your expenses, okay? And a summary of your income. And if you're in an accounting software, you can print your income statement or your P&L for the year, all right? They're also going to want your balance sheet, all right? Even if you are a Schedule C business, Schedule Cs, you don't have to report your balance sheet on your tax return, but having an accurate balance sheet is the only way that us as accountants can ensure your P&L is right. Because things get mixed up, things in prior years get changed, and having the balance sheet from the prior year and knowing where, that's our starting point. Some accountants may, instead of an income statement and a balance sheet, they may ask for a trial balance. That's going to be the same. It's a report that you're going to process out of your software, all right? But they're going to want those financial statements, some sort of them, and your accountant will tell you which ones they want. So for us, we want your income statement / your P&L, same thing. We want your balance sheet. And then if you're a new client, we want your previous tax return. All right, so those are the three things that your accountant is typically going to want, for sure, every accountant. All right, then we have a list of maybe items that some accountants want, some accountants don't. And that is the 1099s you received. Some accountants want those so that we can tie them out. Some just will tell you, like, that's great, make sure you just keep those. All right. Receipts for deductible expenses We don't want that if you're a client of ours. We just want to acknowledge that you have them. All right, asset purchases or sales records. So if you bought a big piece of machinery or a new vehicle or anything like that, we're going to want that statement, your accountant, just to make sure that it's tied out and reported properly on your financials, but also, again, so that we know how to treat it from the tax perspective, because machinery, equipment, vehicles all have a different tax treatment. They're not just expenses. So we want those asset purchase agreements or sales records so that we can have information about what you bought and how much you spent on it, so we can make sure we appropriately report it on your tax return. All right. And then your accountant may or may not want loan documents, bank statements, and interest statements. All right. Different accountants want different things. We do request bank statements and loan documents so that we can make sure your balance sheet is tied out properly, and make sure no further work is needed. All right. Not every accountant does that. Some just take your information and they go with it, and that's fine. Every accountant's different, but that's just a piece that we do. So we want all of those documents so we can tie out your loans, tie out your banks, make sure you're reconciling. Okay. So, and then yes, items your accountant probably doesn't want, but wants to acknowledge that you have. So your accountant's going, again, receipts. I don't know of an accountant that wants all of your receipts for your business, but we want you to acknowledge that you have them in case you get audited. Another question we're going to ask is, did you need to issue 1099s? And if so, did you issue those 1099s? That is a question the IRS asks on the tax return when we prepare it. So we are going to ask you that question as the business owner. Which brings us to, do you need to file 1099s? If you paid any single vendor more than $600, yes. Okay. That's a whole nother training. But if you have questions about that, we can answer those. All right. Or your accountant can answer that. All right. Keeping in mind, if you are unsure, this is a side note, if you are unsure if you should be issuing 1099s, work with your bookkeeper or your accountant to figure that out, because those are due. You have to file those by January 31st. Okay. That's right around the corner. So if you paid any vendors, you need to consult with your accountant or your bookkeeper to see if 1099s need to be issued. All right. And then your accountant is likely going to ask you a few questions, or questions you need to be able to answer and maybe have documentation for if the answer is yes. All right. And it's, have there been any major changes to your business or major purchases? All right. The reason those are asked, major changes, did you have a new business entity? Did you have a new owner? Is there an ownership change? Those are things we have to report on the tax return. All right. That's more of a question for my partnerships, my S corps, more than my Schedule C businesses. But even my Schedule C is a common question is, did you make any large purchases? Because not always do those go through the business bank account like they should, right? So we're going to want to make sure that we account for those. We're going to, before filing, we're going to, are you clear on the deductions or credits you're eligible for? All right. We get a lot of people who don't maximize, they don't take all their expenses. So let's have that conversation. And then, do you have the deadlines marked on your calendar? All right. And that's not a question your accountant's going to ask. That's something you need to make sure you have. Like, do you have those deadlines marked so that you get your information to your accountant on time? All right. So it is pretty simple, you guys. I think a lot of times we overthink and overcomplicate the idea of having our books ready for our accountant, and then we delay it and delay it, delay it. There is no reason your books shouldn't be done now. And you can get those, and your accountant will love you if you get the books to you now and not in mid-February when everybody's doing it. All right. It's also, you will get like red carpet service likely from your accountant because we're not crazy busy yet, right? We're not in the thick of it. The only things we have on our plate right now, in addition, we're sending out our personal emails, like trying to collect information, but we have a handful of business returns we're working on from the people whose books are done and they've sent them to us. Okay. So just a quick recap. How do you know your books or how do you get your books ready for the accountant, right? So make sure that your books are up to date, meaning your bank accounts are reconciled, your credit cards are reconciled, your loans and liabilities are reconciled, all of your expenses are properly assigned, and your owner's items are properly identified. Again, if you are doing bookkeeping on a regular basis, whether it's you or a bookkeeper, this is not an issue. All right, you're just waiting to close out December, right? You're waiting for December to get reconciled and done, and then you are good to go. Those documents can go over to your accountant. All right, what does your accountant want? They're going to want either a trial balance and or, again, if you're our client, an income statement and a balance sheet. And if you're a new client, your previous tax return. Okay, that's all that we likely will need. Some accountants are also going to want your year-end bank statements and loan statements just to tie those out. All right, but not every accountant wants that. So check with your accountant to see what they want. And asset purchase records. If you bought something big, they're going to want information on that. All right. It is super simple. So let's not make it more complicated than it is. The only people that should be feeling maybe like, okay, this is a lot, are the people out there that aren't up to date with their 2024 books. I know you're out there. There's nothing to be ashamed of. Go out there, bite the bullet, and hire someone to help you get those cleaned up now, not in April. Now. And then see if those people, that same person, can help keep you in line in 2025. Okay. Awesome, you guys. Thanks for joining me. Next week, I don't know what we're learning about yet because I haven't done my outline for the quarter yet. I'm a little behind. So that said, if you are not already in our money, tax, and finance for small business owners, is that what it's called? Money, tax, and finance. Yeah. Money, tax, and finance for small business owners Facebook group. Head on over there and join. That is where you're going to see posts that are asking you guys for what you want to learn and what you want me to come on here and talk about. Okay. So go over there. Let us know what you want to hear about, and we will make sure we cover those topics in our upcoming. I'm doing it now. Like, I'm creating my content calendar in the next week. So if you get in there and you put your ideas in there, I will make sure we cover it. Otherwise, I'm just going to guess. So yeah, other than that, you guys, we will see you next Thursday. Back here for whatever I decide to teach on. All right. Have a great weekend, you guys. Bye.